Okay, welcome everybody to this evening's Audusd Securities webinar. My name is Duncan Cooper. Sorry for the delay, I had a few technical issues. So tonight is a live forex market review, identifying high probability trading levels. So we'll have a look at the market, see what's going on, what would be the best levels to look at to trade around. So before we get into that, if you can read through the disclaimer, if you're on our YouTube live stream, I cannot see the chat, but you can join us by following the link. For those in the webinar, I have the webinar chat box open or the question and answer box open, so you can use either to talk to me. So everybody, please read through the disclaimer. All right, we'll move along. Now, if you don't know me, you can see maybe a name or two there that's new. My name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at Audusd Securities, and I am a full-time forex trader. I've been trading now for more than 15 years, mentoring for more than 10. If you want to contact me, my email's there, duncan.cooper@acy.com. And through the week, you can connect with me on our website, acy.com. Go to the Market News tab or ACY Securities Australia YouTube channel. Or you can connect with me on Twitter or LinkedIn there. I do put some analysis through my social media through the week. And you can connect with us too in our Telegram channel. If you'd like to get access, just contact Nathan.bray. I'll put his details in the chat in a moment. If you want to get access to my chart alerts and templates for MT4, just contact Nathan too. So I'll put his details in the chat. There we go. All right, so let's get into maybe what's coming out on the news front first of all. So let's bring up that. And just want to double check you can see my charts, so you can see things changing. Should be able to see my screen changing. All right, so at Forex Factory at the moment, hopefully you can see that. Now, from a news front tonight, we have the US unemployment claims coming out 10:30 p.m. Queensland time, 11:30 p.m. New South Wales. And tomorrow in early morning, 2 o'clock Queensland time, 3 o'clock New South Wales time, we've got the Fed Chair Powell speaking. He could say something to drive the markets. From the UK tomorrow afternoon at 4 p.m. Queensland time, we've got the retail sales data coming out. It's been quite a light week for data, but we're definitely seeing US dollar strength prevailing. Right, so just be aware of what's coming out. Really, the US news there at 10:30 p.m. The unemployment claims. So let's get to the charts and we'll have a look at the dollar index position at the moment. All right, so we're probably equal for the week almost to last week. We've been having a little bit of inside dip this week. But when we get to the day chart, we know we're holding above this weekly area of resistance now. Became support on a rejection last week. And we're putting in another higher bottom here. So higher bottom, are we moving up to a higher top, further moving up? If you've been following the yields, the 2-year yields and the 4-year and the 10-year yields, they're moving up to new highs. So with the yields rising, US dollars rising, pairs to the US dollar are declining. All right, so in S&P 500, we've been looking to see if price could get up here, but it hasn't been able to. So I think that's the end of that. We're actually in all probability now to the weekly chart. Still a little bit on the fence, but we're probably putting in another lower top here to move down. We've had almost a 62% retracement, not quite. But on the day chart here, moving from the weekly chart to the day chart here, we are now at lower top, lower bottom back on the day chart. So the downtrend starting to form on the daily. So whilst I think this fib tool is relevant for a longer term move down based on the weekly structure, would be monitoring this little range here for a pullback. I don't want to be, if you want to trade the index, you don't want to be selling at the bottom of the first drop. You want to look for a little day chart rally up to a 62 or 79% level and look for the next lower top to form. And as that's forming, look to get short. And then the last daily chart move, was we moved down to there, almost a 62% rally, and then we're probably then going to copy the next leg down like the previous leg. So in terms of length, it's probably like that. So we'll have to wait and see what comes around. But on the day chart perspective, it will probably come down, rally, come down, rally, come down that way. Okay. So I'd look for the next rally to occur and then look to trade the downtrend after that. All right, let's get into the euro dollar. Now, I have been looking at, just the day chart here, been looking for a rally back up to the 79% level, which is at about 106.08 and up to this resistance level, but we never quite got there this week. And when last week we had, let's get rid of that fib, we had a nice rejection. So I was just looking to see if price could get up inside the range of this week high for them to move back down. So we're actually stuck between between weekly support, 105.16, and monthly resistance at 106.35. You know, 105.16 is potentially support at the moment until it really breaks, but the overall trend is down. So you don't want to be selling too close to 105.16 because that could be support. So you want to get short if you want to trade maybe the high time frame trend, which is down. This whole move down here is somewhat a little bit up the range if you can. Now we might cycle back up inside the range of yesterday. So you could monitor yesterday's range, see if you can get an opportunity to sell higher up in the range of yesterday. So let's have a look at that to the 15-minute chart. That's the range of yesterday. So we have a nice overlap, two relatively close overlaps, but this is a closer one. There's the pivot point here at M3 and the 62 level at 105.66. So in a perfect world, I would like to sell a rally, and often we just retrace back inside the range of yesterday. So levels to watch would be up here at 105.66 and 79% level up here with that pivot at 105.78 area. Now, whether or not we can get a high rally, but you don't want to be trading too close to supports. Supports at 105.16 at the moment, which is about 24 pips away. So there's not much room from where price is now to there. So looking to sell a rally would, I think, be the way to go for the day if we can come up to a higher level. All right. Euro yen. Now, I was highlighting the possibility of a head and shoulder pattern forming on Tuesday, but we actually came up to test last week's high. And that was after intervention came in. Intervention came in. I don't think they've said intervention came in, but after I finished the webinar on Tuesday, I think 5 minutes later, intervention came in on the yen pairs. So that really kind of maybe became a little bit null and void the head and shoulder pattern, because you'd probably be a lot better off than waiting to see how price sat after the intervention. Now we've come up on the day chart, back up to all these resistance highs to the left, just short of last month's high at 158.65. And there's a possibility that a little double top pattern is forming here. All right. Now, I don't know if we've broken the lower yesterday yet, but a break of yesterday's low to confirm the double top. But what you can see here is that we dropped yesterday, rallied back up to a 79% level, then we fell. We may come back up to put in another lower top now on the 4 hour before moving down. So I would be monitoring. If it's a double top, we could be moving down to the 200% level down here at 155.08. And I like to get in by the 79% level of the range. So here's how to draw the double top potentially in. And I like to be getting in by the 79% level from the high. So you can maximize your risk to reward targeting down here. So today, if you draw a fib in from that high down, then we'll have a look at it on a 15-minute chart. So it's yesterday's range from high to low. Pretty much what I was just showing on the euro dollar is, can we come up to a higher level now? The 62% level of this range from high to low is pretty much overlapping with the 79% level of the double top range. So that would be, and there's a resistance level a little bit higher up, but that would be a good area to watch. Can we come up to the 62 level and 79% level of the bigger range? So 158.21 to 22, that would be a good area to watch. If you can get higher, great. You have the 79% level up here at 158.35. So I'll be watching those two areas to see what price could do higher up. But as I said, I like to be in by the 79% level. It's below the 79% level of the double top range. So if you can get up to the 79% level here, 158.22, you could be selling here, stop above the high, trading the double top. And then you see as to whether it all runs out nicely or not, okay? So there's a double top based looking at the 4-hour chart. Can we come up a little bit higher up in the range and offer you the opportunity to sell for another lower top forming on the 4-hour chart? All right. Euro pound, it's moving up because the euro is stronger than the pound at the moment. And no question where the trend is here on the daily and on the weekly, but I was looking up here for a possible failure, but at the moment it's trading through. So the weekly trend is putting in a higher bottom and the daily trend is up, okay? We're obviously at the top of the move, testing a very known area of resistance here. And just because we're above today does not mean that we won't false break today. And this higher level is actually a monthly level. So if you go to the monthly chart, there's a monthly high to the left here, which is just this area here on the weekly. There's a weekly high here, there's a weekly high there. So we are definitely in a resistance area. So it's not the best area to be a buyer. Doesn't mean to say price can't move higher, but really if you wanted to be a buyer, should have been in by now. So 87.06 is that weekly high. And I would just be watching at the moment. I know it's in an uptrend, but we're in a clear resistance area. That's 87.06, that's 8700. You can see all these little highs over here where we were a little bit consolidatory for breaking down. This could be where we're hitting straight into resistance. So I would just be watching to see if we start to reject up here and do we fail. It's not an area where I want to be buying, but if I start to see price structuring a failure up there, you could maybe start to look for an opportunity to sell. But at the moment, it's not giving any signal yet, but we saw a clear 4-hour rejection up there. That would be the starting point. All right, let's get into pound dollar. Now, pound dollar, it's very weak this week. This is the range of last week on the 4-hour chart. I was looking for a revisit up here. This is a daily high. Hi, Azu, how are you? So I was looking for price to come back up within the range of last week, but it's not doing that. So this is a lot weaker than the euro dollar. That's why the euro pound's moving up. We've only been able to potentially almost rally 50% of last week's range, and we're moving below last week's low. So it's relatively weak. Now we are maybe at the bottom of the current move in terms of the 4-hour ranges here. So you don't want to get caught on the bottom of a move, because this is, if I draw a fib in across what was a range here, we're at the 127 area. Came up and made this little double top. So now I will be watching to see if this can now rally and then look for a sell. So I will be looking for this as a range. I'll use that little lower top there. That's yesterday's high. And can we rally back up to look for a sell to the 15? So that is yesterday's high. That's the current low. We're at 121. So 121, you might see a bounce from the figure down there, but the overall trend is down, down to a new low for this week compared to last week. But looking, look at the 62 or the 79% level for a rally. for then the next decline. Because if we're getting down to the bottom of the current move, potentially, when we're doing a little bit of fib work. So I never want to be selling at the 127 level. That's the time to take profits and wait for the next rally. So can we rally back up to the 62 or the 79? If price keeps moving down, I'll just keep adjusting the fib. But at the moment, there's your 62, 21.67, 79% levels up here at 121.86. Pivot point's just below the 62 level here at 121.63. So that area there can often be where price will top out. This is showing you a nice strong trend at the moment down, and often we don't get much above the central pivot point if we can get a rally back too. So just monitoring for a rally to sell. Pound yen, it's kind of in the range here. Hasn't really got to any of the levels I highlighted on Tuesday in terms of where's the buy zone or the sell zone. And Tim, you're asking me on the pound, price has already broken the lower yesterday. Can we still expect to retrace up? Well, I can monitor and see whether it will, but there is no way. I'm not going to sell at the bottom of a day. All right, so you have the option of using the 4-hour range that I'm using for the fib. All right, or you could be using a smaller range. You could be using this range. But whatever range you're going to be using to monitor for a rally, you want to sell a rally in some form. You don't want to be selling just at the bottom of the day, because you can almost guarantee if you sell the bottom of the day, it's going to bounce back up against you. So you always want to understand the structure, understand where we're at within the most recent structure and how you would have drawn the fib across the most recent structure before it broke. And where are you within the fib tool? You know, and from a 4-hour chart perspective, you know, the fib would have been drawn like so when the price was coming up here, and you're at the 127 profit taking area. Now you can sell down there if you want, but there's a high probability that it will rally back up. All right, so that would be the range that I would monitor. Now, price might not get up, but I would need to see price at least come up in some form. All right. All right, so the pound yen. So these are the areas I've been watching, but price really isn't getting to any one of my areas. Slavia was saying about the pound. Let me just go back to the pound. I've got some more questions coming in. Slavia saying, went through last week's low. Do you now think that will be resistance? Well, it could be, but I would probably just using the fib like I was showing, I think you'd get a deeper rally because we're not that much below last week's low here, and we've got last month's low here. So these two levels, in my mind, because we've had an extended move down now, these two levels could actually get false broken to move back up, depending on what price wants to do. If we just keep going down today and then we had a rally tomorrow, yes, I would look at last week's low, but I don't think we've really broken it enough. We're only 20 pips below. I don't think we've really broken it enough to be solid resistance. We'll have a higher chance of it false breaking potentially. And Edwin, you've been looking at the pound for a buy, putting fib from low to high, almost at 79% fib. So you're looking, well, you know, if you're looking for a buy, you're definitely going against the dominant trend. So you're looking at this here. Yeah, I mean, you could be looking at this as a left shoulder, head, right shoulder. But this little higher bottom that was forming over the last few days has just been broken. So I can see, yes, there's that pattern there to trade to the upside. I mean, I just think with the US dollar being so strong at the moment, and this pattern that you're talking about at the moment, maybe left shoulder, inverse head, right shoulder, it's not forming to the weekly chart, it's not forming at a significant level of support. It's a little bit in the middle of nowhere. So it's not to say that that couldn't work, but when I'm looking at the weekly chart, really we're having a week down from the rejection of last week. And that to me is just forming a lower top here at weekly resistance to then have a number of weeks down to come down and challenge these levels. So I'm just trying to keep myself in line with this very strong trend over the last 3 months. The head and shoulder pattern could come together, but I don't know if that's really pushing the trend at the moment. Now, if today, for example, we finish with a reversal candle, so we're saying there's a 79% retracement here, maybe a left shoulder, right shoulder here. If this was to show a rejection candle today, then there's still plenty of room then to think about getting in to trade up if the day chart can show you a signal there. All right, at the moment, it's not showing a signal, but who's to say what price will look like by the end of the day? So I can see what you're saying there, but I don't know if you're booking the trend there from the weekly chart perspective. All right, so I'm going to stick with the way I'm going. I'm just going to keep dragging that fib down and keep moving down. Now, the rally might not come. So, this could be the high of today. Then tomorrow, wherever the low is today, I'll draw a fib from that high to today's low and then look at that range for a rally back up tomorrow. But I'm not going to engage at the low of the day. All right, let's get into the pound yen. I think I said this on Tuesday. I think this is looking very similar to the pound dollar. We rejected fractionally short of weekly resistance last week up here at 184 and potentially putting in a lower top here. All right. And this week we haven't been able to get back up quite up to this resistance area. And it's really putting in a lower top here. A little bit of a left shoulder, head, right shoulder, but you're a little bit short of the resistance. To me, this is probably changing trend to the downside, but just in a horrible area where there's lots of support here on the pound yen. So, I mean, this could come into support and hold. We really need to see a break underneath this area here first, I think. If you're already short, that's great. If you're not already short, you're really, selling headlong into support here. Now, if it was to offer, like I was just showing you on the pound, a rally back up to a 62 or 79% level, so back into this zone, then you'd be trading, we've gone from a little double top to a lower bottom because we've broken through that bottom. If we could trade up and put in this kind of price action, if you can be selling up here, then when it comes down to test support, you're at break even and you can, you're just waiting to see if we can break through this area of support down here. All right, so you have to fight your battles because we're actually coming into these two support lows here and the support low over there, coming in to test last week's low. So not a great area to sell. But if we can get a rally, like I'm suggesting, that's, I think, something to monitor. All right, let's get into the Aussie yen. Now, this is how I drew it up on Tuesday. This little imbalance in here. I was saying watch the 79% level. And I covered the 79% pattern yesterday in yesterday's webinar. And that offered you, if you were selling up here at the 79% level, stop above the high, well, you'd be risk-free and in profit at the moment, anticipating, this is last week's move down. This, in all probability, is this week's high. So we could be now moving down, putting in a similar range. Lachlan, your question about fibs. When would I move my stop to break even? If I'm doing a positional trade, I tend to, if I'm shorting it, if I'm going short up here at 79, stop above here. When I'm up, what I'm risking, I'll get the risk out. All right. perfect example. So here, if you were selling at 79, stop just goes above here. So let's say we're risking 40 pips. So when this shows 40 pips of profit, which is about there, you go to break even. It's never come back to your entry, and now you're just managing the profit. All right. Sometimes what I do is I might be selling here, stop above there. And if I'm looking for a long-term trade over many weeks, I don't go to break even until we've broken the low or tested the low. All right. But in this example, because it's rather range bound, and price may only want to come down to here and then move all the way back up. In this case, when you're up the risk that you're risking, get the risk out, and then you're waiting to see how it carries on down within the range. So in terms of trading this pair at the moment, it's difficult because up here was really where you wanted to be selling. We're getting more close to support in the profit taking area, but if you want to get in, you'd really have to monitor this current range here to see if today like I've been saying on the other pairs, see there's a bit of a significant support area in here that overlaps with the 62% level. So that's around about 95.14. There's a central pivot point there. You have the figure here at 95. Seeing price, if it can, to move into this area would be a good rally area to try to make an intraday entry with a tight stop for the continued move down. Where it is right now, you're getting very low down with the current move down. So there's always a great area to look for an entry. And then, as price keeps moving down, so if you move back to the 4 hour, as price keeps moving down, you're getting close to the bottom where everybody's taking their profits. So if it could come back up there, you could consider this area up here. But up here was, Tuesday I was telling you to watch this area up here. Yesterday was the day to get short. Now the process is really on this pair to be managing the trade to profit. All right. All right, Aussie dollar. And of course, we've had the job figures come out today from the Aussie, which has sent the Aussie pairs down. So Aussie dollar, I was looking up here at the 79% level, but on this particular pair, it never got up there. So on Tuesday, I was looking up here, but it never got there. So the high of the week, in all probabilities, come in at the 62% level of last week's range. Now, there's an area in here, which is these weekly lows. So the weekly trend's down, and on the day chart, it's this area here. 63.57 to 63.57. If we can rally, that will be the area to watch for. That's the best area to watch at the moment for a selling opportunity, but we may have already missed that area this week now. So the 4 hour chart, we're actually getting quite low down in terms of where support can come in at. If we go back to the day chart a moment, we got some monthly support down here at 62.47 and we're trading at 63. So we're only 50 pips away from where monthly support is. So this pair, whilst we can see it's trending down here for another lower top, you're probably going to find quite a lot of support from 63 down to 62.47. 62.47 is monthly support. If you go to the monthly chart, it's this area over here. All right, so we're in a known area of support, so that's why it keeps bouncing up from around about 63. So you just need to understand where we're at, and we could actually see a bounce back up from here if we don't get any more negativity for the Aussie dollar. And so the level would still be to watch up here. Trend is down, but you want to know what levels to fight your battle at. These are low levels to fight your selling battle at, I think. So I will be watching back up here at 63.57 to 64. Can price come back up to this level? do we see further holding there to move down. All right. So a little bit overextended today. Following, if we go to the 50-minute chart, it's kind of holding here like the Aussie. Well, if we go to the Aussie yen 50-minute chart, you can see that's relatively sideways in the low of the day. Same with the Aussie here. So we may be getting support here at 63 to at least come back up to range. So I don't think this is a great area just to sell. And when the green area pivots, you could draw a fib across that range. Potentially that could be the range of the whole week now. And the 62 level of that range is at 63.55 and weekly resistance at 63.57. So in this area here is really where you want to look to sell rallies. Don't be selling at the bottom of the week, because if that's the range for the week, it's going to retrace back up inside the range. Don't get caught at the bottom. All right. And just back to the Aussie and making a statement. It's great to be able to do a webinar where everything's at a great level right this minute that you could just go and trade at. But when I was doing the webinar on Tuesday, I said, watch this area. Well, that area came together on Wednesday. All right. So there's always the best areas to trade from or to. And you're not always at the best area when I'm on the charts with you guys and girls. It's a question of where's the price position at any given time. All right, so we've covered the Aussie pairs. I think Aussie, we might, if we see a clear break below 63 this week, maybe we do go down this week to test back to the day chart. Maybe we do go down and test monthly support this week, 62.47. Well, the logical level would be then 63 to become a resistance for then a move down next week. All right. So something to bear in mind over the next few days. All right, getting across to New Zealand yen. All right, so we haven't had a rally. Sometimes the best place to get in is a week ago. It was up here when we started to fail up at weekly resistance up here. Now, if we go to the weekly chart, we're failing up here. We're starting this week to move below this level of weekly support resistance. And we could be targeting down here at this weekly level. 85,784. All right. Coming into some day support here. So this isn't the best area just to go and sell, but it would be great if we could come back up to 88.16. Now that we've broken below, I said this on Tuesday, I was waiting to see if we could break below this 88.16 level with some conviction, which we've done. But we may well see a retracement back up to that level. It's 100 pips away, but over the next couple of trading days, we've already done pretty much the range of the day. So just going, well, this is in a downtrend and selling, you're going to be selling at the bottom of the day. And if we drop to the 15-minute chart, today's projected low is at 86.79. So we're about 38 pips away. That's if we can get down to that level. We may hold at 87 there, but just monitor the 4-hour chart. There's the range. You might have to wait 24 hours for a rally. That could move down a fraction more. You might get the 79% level overlapping with your weekly resistance up here. All right, so I would just monitor it for a rally. Not a great area to be selling here right now. There's some support down over here. But look to sell a rally once more. All right, New Zealand dollar. We can see why the New Zealand yen's moving down. New Zealand dollar is moving down, I reckon, now to a new, it is a new low because I'm on the day chart here. This is what I was discussing on Tuesday. Could we break support, which we're doing? And then will we get a rally back up to 58.70? So we have this kind of double top here. Target for the double top, as I said, on Monday, sorry, on Tuesday, is down here at 56.92. But we've had 3 negative days in a row here. Need a day up. Doesn't mean to say it's going to give you a day up, but, and this is why I say with double tops, I like to get in by the 79% level of that range. So, you know, if you were getting in up here, when we started to fail at resistance, there's the 79% level. You wouldn't be trying to think about how can I get in right now, because you do not be in. You know, you'd be in at the high level, targeting the target down here at 56.92. Now, this is currently up nearly 200 pips from the best entry area. But as I said on Tuesday, if we can rally back, can we rally back up to the broken area of support now to be resistance for a continued move down to the target? All right, so that's at 58.70. Is that a low point there? Could come back up to 59, but that will be the area that we'll be watching if we can rally. That's the area to look for a short opportunity if it presents. If all we do, though, is just keep having a day down, day down, day down, and you're going, well, how can I get in? Well, when today finishes, assuming we're going to finish on a negative day like it's showing, just monitor the range of yesterday. Well, monitor, let's say we're into tomorrow, monitor today's range. You know, there's today's high, or wherever today's low is. Whenever it comes in today, and then we move into the new day, let's say the low comes in here, I would simply then look for the opportunity for the price to come back up within the range of the previous day, the 62 to 79 area, look to sell, stop above the high of yesterday for the next day down. All right. So if we keep having days down, that is the simplest way of trying to get in. Look for a movement back up inside the range of the day before, but you just have to monitor price to see what it's doing. All right, at the moment, it would seem, if we go back to the dollar index, and that's not too bullish today. I mean, it is bullish, but it's not too bullish. But the New Zealand dollar for sure is very negative today. Once, you know, the market can clearly see this double top here. It knows we've clearly broken supports, and now it's just selling, selling, selling. Jamie asking, why always looking at 127% extension, not 162 for a retracement occur? Well, price can move to the 162, but if I draw a fib in here and look at a downtrend, right? When price is moving down, so let's say price is rallied to say the 62% or the 79%, is more often than not, price will come to the 127 and then have the next rally before then moving down. From a probability perspective, for a bounce back up for the next rally, it's usually the 127 extension. It can be the 162, but it only gets down to the 162 in a very strong downtrend. So more often than not, once you've been trading at the 127 extension, price will find support. It might trade through a little bit. And then what you should be doing is then redrawing your fib and then looking for the next rally to occur, which is what I've really been discussing this evening, because price on a lot of pairs is getting down to 127 level for the next rally to occur before then moving down to the next 127 extension. All right, that's how price generally unfolds. So if that's how price generally unfolds, when we're at the 127 extension, like I was showing on the pound, there's a high probability it's going to rally back up. Doesn't have to. Price is always right, but statistically, if you watch what price does, if you're using fibs as an analysis tool, all right. All right, so same with the New Zealand dollar there. We're almost at the bottom of the day. look to sell a rally. In a perfect world for me, it's a rally back to 58.70 to be resistance for a continued move down to 56.92. All right, dollar Canadian. Now on Tuesday, so we're into Thursday, Wednesday, Tuesday. I said watch 136.94. Came up there and rejected, but ultimately because of the US dollar strength that we're seeing, then we've been moving back up and we've obviously broken above that level. So that level now is the level to watch for a pullback if it can occur. You know, a lot of Aussie dollars at the bottom of the day, New Zealand dollars at the bottom of the day, the dollar CAD's at the top of the day. Makes life difficult if you're just getting in on your charts, and how can you get in if you're not in a trade? Key levels to watch though, to be notable, you know, 138.61 is the next major level of resistance here that we're maybe heading towards in terms of the monthly chart. In terms of the weekly charts, this level here at 137.85. All right, it's a day chart. So we don't have a lot of room for one, you know, we've only got 45 pips to go from where we are to, you know, that high there. Only didn't quite pull back to the 62 level, but we're on the way back up. So that fib's a little bit relevant at the moment. So really, if this is going to have a pullback and continue up, then the level that we're breaking above this week, 136.94, so let's just call it the 137 level. You know, if we pull back to 137, well, we're only 38 pips away from 137. That could be a very good support level for a pullback too. All right, let's look at the 4-hour chart. So, and today we've already, or whenever this 4-hour candle occurred, it may have been just yesterday, we broke above 136.94, and you can see then we try to pull back below and got support to move up. So this is really the level to watch, 136.94 to 137. Can price pull back to that area? Because it proved on that these two candles here that supports wanted to be offered at that area. So T15-minute chart. Could come back down to the central pivot point depending on what the US job figures does later in the day. We've also have last week's high that we've clearly broken. So, and we've got last month's high here. So this is really the area to watch. 137 down to 136.94. I think that's the buy zone if we can pull back today. Of course, I don't want to be buying at the top of the day. So can it pull back for you? You'll have to monitor. Dollar franc, not at the low of the week. We could be forming a reversal week here. Whilst the monthly trend is down, and we could be forming a lower top here on the monthly chart at the 79% retracement of the range. With the US dollar being so strong, this weekly chart is actually turned up when we broke above this high here. Yes, we folks broke it, but this could put in a higher bottom. This could show a positive candle by the end of the week. Breaking above that high next week could mean we're putting in a higher bottom here to move further up. That would be in line with what we're seeing on the euro dollar, which is the opposite, putting in a lower top on the euro dollar, for example, and same on the pound dollar. So it's a bit tricky because the dominant trend is clearly the monthly chart. And daily, the day trend's down at the moment. So I really think on this pair, if we were trading to the upside, you'd really need to see the day chart trend turn to up first, and you'd have to see price move above a top change trend. So really, there's a fib range here you could monitor. I mean, the trend is to the downside on the daily. That's the range to monitor at the moment on a lower time frame. Again, you know, look for a ride to 62 or 79% level within the day chart trend, which is down at the moment. If we break above this high here, that's going to change the J chart trend back to up. And if that happens, we're going to have a week up next week, and then the weekly and the day trends are up. All right, so at the moment, I would monitor that range to see if we could come up to a 62.79% level. All right. Not my favorite pair at the moment, dollar franc. It's a little bit, it's been going counter to what we're seeing on the other pairs to the dollar, which makes things a little bit difficult. All right, dollar yen. Now, if you're with me on Tuesday, this is where I was saying you could look for an opportunity to sell at high levels. And about 5 minutes after the webinar finished, well, we got the intervention. So just kind of proves the point at the moment with the dollar yen that whilst it's in an uptrend, when we look at the daily, weekly, monthly charts, it's a little bit precarious when we're very close to that 150 level. All right, so I just wanted to, highlight what I was saying on Tuesday, and then after the webinar finished, down we came. So let's have a look at the day chart first of all. And I actually did say in the webinar, if you wanted to look for an opportunity to buy, draw a fib across that range. And I said, look at the 62% level and support here. And we didn't quite get down there, but that was the area that I was looking at when I was saying, well, if you wanted to be a buy with the longer term trends, that was the level to watch. Well, that's where the buyers came in just ahead of to then shoot it back up. So really still that is the level to watch. It got a fraction short of day supports. That's where support's coming in. So that really still is the level to watch. If we get another intervention, he's down at 148.84. Now that 148.84 I'm getting from the day chart. And if you squash in, it's an old high area over here. All right. So really, to me, where price is at right now, it's too high up. So almost at the 150 level. Excuse me one moment. All right, so I have to blow my nose now. If we go through the time frames, the monthly trend is up here, the weekly trend is up, and the day trend is up. But we know from an intervention point of view from the Bank of Japan, 150 is their intervention level, really. Well, I think we've already seen an intervention this week. So 50 pips away from that level is, and if they intervene, we're not going to know until they do it. So it's very difficult. You either have to just position yourself at or around 150, and then you're waiting for the intervention to come in, or you're waiting for a clear signal. And Slavy saying, well, an intervention from the board, isn't it like free money to short pound yen close to 150 with stop loss above? Well, I don't think there's ever free money, but it's a high probability trade. It's already worked twice. It worked over here. The high up here at the moment, we've been to 150.15, and up here, we had about a 250 pip drop. So if you were shorting up here at 150, stop at 151, you could have made 1 to 2.5. So I think it's a high probability short at 150 in terms of what's been going on. But I don't know if we can quite say it's just free money, but I know what you're saying. So what I can see is a little bit of a 4-hour range here, and it's pretty much what I was doing on Tuesday. This little 4-hour, so back to the 4-hour chart a moment, this high to this low. I know this isn't an uptrend, but read for me, this is dropped. Is this coming up to rally to turn over and move down? So with that in mind, if we move to the 15-minute chart, just there, I showed you this exact same technique on Tuesday. I said, is it going to fail at the 79% level? And then at 5 minutes after the webinar, it hit the 79% level and dropped at least 100 pips. That was the drop down there. What did it drop? Drops, well, not quite 100, about 80 pips. So right now, we're seeing some selling pressure at the 79% level of the 4-hour range. Are we moving down this way once more, like we did over here? All right, so it's entirely up to how you want to play things. Doesn't mean to say we can't move above 150. If that US dollar keeps gaining, if the yields keep rising on the 2 and the 10-year bonds, maybe we are moving above 150. It won't mean that maybe the Bank of Japan is not going to come intervene, but maybe the Bank of Japan may be looking at the bonds and going, well, fighting at 150 may be too difficult. Maybe they want to let price move up to 151, 152. So it's never a given that 150 is a safe bet. But if you're shorting here at 149.87 or close to, stop a little bit above 149.93. Or at least have you stop above this high up here. So that high got to 150.15. So put your stop at, say, 150.25. You're risking about what, 40 pips or so at the current levels. And what happens if it drops 300, 500 pips? Good risk reward, but yields are continuing to go up. So maybe the Bank of Japan may not fight at 150. So we'll have to wait and see. All right, let's just finish off with gold. We're actually got lots of lines on here from the weekly chart, but we're having an outside reversal month, getting some form of support just down here ahead of 1804, and we're coming back up on the weekly chart to some high areas here. There's this 1959 level that we've struck, I think, today. 2 highs here that we could false break. Now, trend on the weekly is turning up here. Of course, this is moving up because of the geopolitical landscape at the moment in Israel. But let's say in a few days' time, there's calm, ceasefire. Don't know whether that's going to be the case, but if we do, maybe then this is just a false move up. If we don't have peace coming, well, maybe we're coming up, all the way back up to, could get rid of a few lines off here at the moment, all the way back up to the 2074 level up here. So just worth, watching 1959 and 1947. All right, it's difficult to be a seller, I think, at the moment with the geopolitical landscape. Difficult to be a buyer right where we're at because we're clearly into a resistance area on the weekly chart here. All right. So just from a support and resistance point of view, we may need a bit of a pullback from this area, but the day trend's quite clearly up. There's an area there, 1932.86. That would be a good level to watch for support if we pull back in the short term. From a buyer's perspective, if let's say you're long already, from a buyer's holding perspective, you'd want to see 1932 on the day chart here hold as support to keep up. If price didn't hold at 1932 here and started to move below, I think then buyers are covering their positions, because really once you break above resistance, it should become support to move higher. So if you're looking for the opportunity to get long, 1932 would be a good level to watch. And this pullback to there, up to there, 62% lowers at 1928. So yes, that would be a desirable area to watch for a pullback to. whether or not it will, because if things still stay very, poor in the Israel conflict, this might not pull back. It might just keep going up. But that would be an area to watch. Okay, 1932 down to 1928 for a pullback. That not holding a support is not good for the buyers. So you want to be looking at an area where the buyers need to come in and prop it up. If large traders are taking multiple positions down here, they may well be defending this area to move it higher to keep the positions profitable. All right, so that would be an area to watch. All right, so that's my thoughts on the market at the moment. Azu, you want me to talk about Eurodollar quickly once more. Really looking at this 4-hour range here at the moment, just monitoring to see if we can come up to some higher levels within that range to trade at. That range is from yesterday's high to low. I was saying that support's coming in at 105.16 at the moment, so higher time frame trend is down, but support is at 105.16, so don't want to be selling too close to there. But if it could come back up within the range of yesterday, watching the 62 level at 105.66 and the 79% level at 105.78. And the Nasdaq, want me to look at, like the S&P 500, it's probably putting in a lower top here at this resistance area on the weekly charts. On the day charts, still in an uptrend, really. If we're using the major swings, it's still in an uptrend here. So it'd be nice if that was to maybe just come back up to 15264 area and put in a lower top. I think it might need to show something like that, or at least come up to the 62 level or 79% area, like so, to move down. We're quite possibly putting a lower top on the weekly, but if you're looking to get in, we might need a rally on the day chart to put in a lower top to continue that move down. And Chris, you want me to look at silver? All right, last one to look at before we finish up. All right, we've definitely been in a downtrend on the monthly, but clearly the monthly is rallying up here. And it's a little bit different to what we're seeing on gold, because whilst we're rallying up, this is the weekly chart, we're taking the major swings, we're just a 62% retracement. There's another range here, and we have a 79% level that we're fading at, so 62, 79% kind of area. So again, it's different to what we're seeing on gold. So really, unless we get a much harder move up, from a weekly perspective, we're down, maybe rallying to move down. Because you can see yesterday we rejected the 62 level. And the rejection is coming inside this rejection here as well, from over this area resistance as well. So it looks like at the moment with the rally that's been occurring, 23.21.6 is resistance there. $23.21.6. All right, so you can see why that's holding there. It's from this area over here. It's been used here. It's been used over there. So, if this was to come back up again to 23.21, I don't know where you're looking to go long or short, but what looks like where the sellers are at the moment, or at the 23.21 level. I want to look at the weekly chart. That just looks like a rally on the weekly chart at the moment. It's looking a lot different to what we're seeing on gold. But it's not to say on gold that we don't see to the weekly chart. We could see a complete false break in this area. You know, we could be dealing with this range on gold. And oops, I need that fib drawn the opposite way around. We're at a 7 Amson area to that range with those weekly highs here, 1, 2, 3. So whilst it's structurally different, I can see why that could top out there if it really wanted to, in line with what the picture is being shown there on silver. All right, so hopefully that helps you with your thought process. Have we topped out up there? Nice rejection candle yesterday. All right, everybody, that's it from me tonight, next week. From me, I'll be back on Tuesday with more live analysis at 8 p.m. Sydney time. I'm going to be talking about the double top pattern, how to trade it on Wednesday, and then more analysis from me on Thursday. And all my webinars at the moment coming in at 8 p.m. Sydney time. So with the time change in New South Wales. All right, thanks everybody. Thanks for all the questions coming in. Have a great weekend, everybody. Thanks.